You're listening to ChainLeak, the crypto news podcast with your host, Joshuwa Roomsberg. Follow and subscribe today.
Welcome to the ChainLeak podcast. I'm your host, Joshuwa Roomsberg. Today's episode is about Gilmore Estates, Web3 Real Estate. Today's guest, Chris Gilmore. Welcome to the show, brother.
Thank you for having me. It's a pleasure to be on.
All right. So a couple days ago, I heard of Spaces that you were on, and you went for, I want to say it was close to a half an hour or an hour. The first thing I want the community to hear is what you are building on top of the Hedera blockchain.
Yeah, absolutely. We're building a real world asset tokenization studio. You're going to be able to log on to our platform and tokenize any real world asset all over the world. What is a real world asset? It's anything of an asset that you find of value or your community finds of value.
Okay. Now, let's go deeper into that. These properties that you're tokenizing, is there a specific location you are targeting, or could it be a property anywhere in the world?
So right now we're targeting the East Coast of America. We started in New Jersey, which is my home location. We started branching out and we're starting market research along the East Coast. We've been looking in Florida because that area has been up in hype lately in the real estate market. We've explored Virginia, we've explored Pennsylvania, New York, and we're going to be expanding soon. But right now, our assets are in New Jersey.
Okay. I know I have a few people down in Tennessee, and Nashville's a big one right now, in South Carolina. So keep your eyes on that. As far as the tokenization, why did you choose Hedera versus a variety of other blockchains that are available?
Yeah, so when we first got into it about 5 years ago doing our market research, we researched many blockchains, but Hedera had the only technology that would work for what we were building now and what we had plans for the future. Their timestamp functionality of their transactions is key to know that everything you're tokenizing, everything you're receiving, all the information you're receiving in our knowledge tokenization studio, all of it to be timestamped and accurate to the very second. That was very important to everything that we're building and the fundamentals behind it. And Hedera's technology is the only one current that is superior in that field.
Okay. Now, when it comes to Hedera with documentation and the size of information within a transaction, is that superior as well?
Yeah. The amount of storage that we can access directly on the network is superior to most other networks. Their inscription process, where you can inscribe data right on the network versus using an IPS system, that's major in a lot of different ways. Just about a year ago, we were minting a collection and we were doing it in an NFT format with outside storage, and the images weren't populating. And that's because IPFS switched their operating functions, and we acted fast and we went to the hashinal inscribed route on Hedera, and the images populated immediately because it's all inscribed directly on the network.
Yeah, that's mind-blowing. And that's what I was trying to get at. When you think of Ethereum or Bitcoin, when you try to inscribe information on these two chains, there's limited data availability inside a block. So you're saying Hedera has the ability to inscribe directly on chain?
That's correct. You can inscribe directly on chain. Our one collection we did about a year ago was 1 terabyte of data stored.
Wow.
All inscribed on network. And the cost of it, there's nothing that beats it out there. The cost to inscribe something on the network. And when we did it, the inscription process was just developed. So it was on the higher side to inscribe something. And even then, fractions of what it would cost on Ethereum or Bitcoin.
That's crazy to think about. So you just said that NFT project in itself was a terabyte worth of data. Now, is that for every NFT in that sequence?
That's correct. The in total collection, it was 1,500 NFTs. All that data combined was about a terabyte.
Wow, that's so crazy. Now I'm getting a better understanding of the possibilities on top of Hedera. I've never heard of a blockchain being able to store a terabyte worth of data. That's pretty unique.
Yeah, the unique thing about Hedera is it's not a blockchain, it's a hash graph.
Ah,
So
got me. I always get in arguments with people on Twitter about that. They
yeah,
say they say it's not a blockchain, it's a hash graph. And then when you say it's a hash graph and you don't include the blockchain, they get feelings about that. They want to be included in both, but they definitely say it's not a blockchain.
yeah, and the whole marketing aspect of Hedera Hashgraph being a blockchain killer, and that everybody says it's not a blockchain, it's a hash graph. In my opinion, it's actually doing them a disservice, because it's hard enough for people to understand what a blockchain is, let alone this new hash graph
Right.
technology. So right now, when you're promoting it to normal investors, coming up with this new terminology when they're just starting to grasp what a blockchain is difficult. So
Yeah.
yes, there are some similarities, but it's just like a blockchain, but on steroids. It doesn't. It's not limited as a blockchain is, and there's just so much more you can do, and so much data you can put on chain. So many, it's capable of doing 10,000 plus transactions per second. There's just so much you can do. If a transaction if you submit a transaction to buy something, and you're only buying $1,000 worth of it, but somebody else comes in a second later and purchases $1 million worth of that token, your transaction is going to happen first because it happens first. Versus Ethereum, that $1 million transaction is going to happen first, and then what you're buying $1,000 worth, the value of that token is now skyrocketed because somebody just invested $1 million. So where
Yep.
you has invested $1,000, now you get your transaction back in 10 minutes, and you've automatically lost 50% of your money right off the top.
Yeah.
And that's just because of how the transactions are set up. And with Hedera technology, that doesn't happen. When you submit your order, it gets filed first.
Okay. Because when I have them arguments on Twitter and on Telegram with people, the way I look at it is I try to explain it as the people that are listening to me, 60-70% of them are not into blockchain. They may be new to this industry and may not even understand the terminology. So if I'm trying to teach them about the industry itself, I'm going to consider Hedera a blockchain. We're in the blockchain industry. So that's the angle I take, and they get so mad at me, but it's the
Yep.
easiest way for new people to understand.
Yeah, absolutely. Another thing that's special about Hedera is their fixed fees. So if the price of HBAR goes up, the fees that you pay to swap your tokens or store data doesn't go up. It's fixed to USD. Whereas Ethereum, if Ethereum goes up, you're to do a
You're paying
transaction, it
10,
costs
20,
more.
$50 a transaction. Yep.
Yeah, absolutely. I relate Hedera, Hashgraph, and the Hedera Foundation to modern day Macy's, because Macy's back in the day, they were the first enterprise store to go from the bartering system to fixed costs of items. Whereas
Okay.
back in the day, before Macy's started it, you could go in and you could barter and get something for cheaper, or the salesman can sell it to you for more money.
Okay.
And Macy's was the first enterprise store to do fixed costs on things, and that's Hedera. They're the first ones to do fixed fees, and I think it's going to be something that's going to be adapted going forward.
That's awesome. Now, coming back to real estate on chain, if you guys are starting on Hedera, you also have a multi-chain infrastructure. Now,
That's correct.
with that, do you guys have the initial tokenization on Hedera and it bridges to other chains, or is it tokenized on each chain individually?
It's tokenized on Hedera and bridged to the other chains.
Okay. So let's go into that a little deeper. What other chains do you have your real estate property on?
Right now, we have our token Gcoin ported from Hedera to Base. It's available in Coinbase Wallet, and you could swap it on Uniswap. We're also in process of porting it to BNB Chain. We're waiting for the bridge to go through some updates with Wallet Connect. And we have the BNB stored right now, ready to pair with our token. But we're just waiting on the Hashport bridge to deal with their Wallet Connect issues, and we will proceed with that. We also have plans to go to Polygon, Arbitrum, and many other networks.
Okay, great. Now, do you guys have any demand to go to Solana?
Yes, we do have lots of demand to go to Solana. Our developer team is so right now there's currently no bridge from Hedera to Solana.
Oh.
Recently, they've integrated ChainLink technology and CCIP and ChainLink oracles. Right now, ChainLink oracles is the only thing that's fully integrated from ChainLink. Their CCIP is technically integrated, but the bridge isn't seeded. So it takes $500,000 worth of HBAR to seed it. Hedera hasn't done that yet, and I don't feel like Gilmore Estates should have to front that bill for everybody to use the bridge to go to Solana or XRP or any other chain that's currently not available to Hedera.
Yeah.
But if it isn't seeded in a certain time frame, my developers are ready to build their own bridge to Solana and XRP.
Okay. That's pretty sweet. Why would you choose XRP over Solana?
It's not that we would choose XRP over Solana. Our goal is to make our estate token available on every decentralized network.
Okay.
It's just a matter of when the bridges become available or when we build those bridges ourselves.
Now, when it came to the concept of digital tokenized ownership, what was the reason you wanted to get into this and bring Gilmore Estates on chain?
Yeah, so early on in my real estate journey, I went through major road bumps. It was very difficult to get started. A lot of people didn't want to share the information. My grandmother has been a real estate investor for decades now, and she also was a employee for Coldwell Banker, and she's a district manager now for them. And she started her real estate investment journey selling skyscrapers in Manhattan. And through her connects, she got me started, and I learned from all of her mentors. And what I really learned is that these systems and the access to real estate is locked away to the people that know how to invest in real estate and pass that information down to their family. And I just didn't think it was right. It was hard enough for me to do it with connections. So for somebody without connections, it's impossible. And I thought, what better way than to bring it all on chain and make it available to the general public? I've been taught in business that what you want to do in order to start a business and a successful business is find a problem and solve it. And that's what we did with Gilmore Estates.
Okay. Now, I'm trying to wrap my head around the property aspect. This house, I bought it for 103. It's valued at like 260 right now. How does the market evaluate those rental property NFTs based on the current value of the property?
So the value of the asset NFT on secondary market, it's determined by what the customer or the owner of that asset determines the value of it. So, one person could sell it for cheaper than another person, and it all depends on what they value it. You're not just investing in what the value of the asset is. You're investing in what it provides you, the passive income, the knowledge that you gain from operating in a passive income system on a smaller scale. You're able to use them as educational tools to really teach about compounding interest, about passive income, and how you can build wealth off of cash flow.
Now, is every NFT in your ecosystem a rental property?
No, so we have multiple different collections. We have our asset NFTs, which are the rental properties tokenized in NFT format. We also have our founders NFT, which that's a direct investment into the estate. So you get an airdrop every single week, Sunday at 8 p.m. EST of 278 Gcoin. That money from that airdrop, the estate always buys that token back. So every month we take cash flow from our untokenized real estate properties and we buy back the token, put it in our fractional reserve wallet, and that keeps on recycling. So there's always a buyback, and we send out the tokens to our valued holders, and that's weekly passive income. We also have our Pioneer NFTs, which those are liquidity provider NFTs. So you provide liquidity to our Gcoin HBAR pool, our Gcoin wrap Bitcoin pool, or our Gcoin base Ethereum pool, and you get monthly rewards on the 15th of every month at 8 p.m. EST. The value of your reward depends on how much liquidity you provide, how many NFTs you hold of the Pioneer NFTs, and the trading of the token. So the volume, the 24-hour volume of the token, and the monthly volume determines the rewards also.
Okay, so, because let me stop you there. That's what I was trying to get at, is for the property ownership itself. If I wanted to buy an NFT to participate in ownership of the Gilmore Estates, how would I determine the value if one of your properties is valued at 300,000 and it goes to 6? How is that value represented on chain? That's what I'm trying to understand.
The value of the asset NFT?
The value of the property itself. Do you get quarterly or yearly? Trying to think of the word for it, but I can't think of the word for it. The value of the asset. Where they appraisal. There we go. Appraisal. Yeah. So do you get yearly appraisals on the property?
Yeah, so once our platform goes live, all that documentation will be available to the holders. They'll be able to log into the platform, connect their wallet, and then have access to all the information of the asset NFTs that they have. So the process, the properties do go under appraisal. It really depends on when we're looking to restructure and refinance that asset. Now, let's say you own the asset NFT. Let's say you own 0.5% of that property. If that property goes under appraisal and a cash out refinance, which we do often in order to grow our estate, you get that portion of your equity in a airdrop. Okay. So you'll get 0.5% of the new appraised value of that asset in an airdrop, and then you still own the NFT, still get passive income. And once the platform is live, you'll have the option where you can reinvest that capital into the next asset. So you'll essentially, instead of getting that airdrop, you'll get a new asset NFT of that asset that we purchase.
Yeah, because that's what I was trying to figure out, is if you guys buy a property for 300, the new appraisal is 600. Where does that difference get represented on chain? That's what I was trying to understand.
Yeah, absolutely. And right now we've tokenized assets that we already own, and we're looking to do, in the future, we're going to be doing community purchase assets. And so what happens there is the community is there's going to be on our platform, you're going to be able to log in. You're going to be able to invest a certain amount of money, whatever you determine you want to invest in. And that money is locked for 6 months. Okay. And what happens in that 6 months is we take that money, we invest it in the property, we renovate that property, fix anything that's wrong with it, update it to the standard views and interior design that people like to see, and then we
Yep.
rent it out. When we get a tenant in the door, now what we do is we call an appraiser. He comes in, he reappraises the house, and then on that new value, we do a cash out refinance. Okay, so we pull the equity that we built from the renovation out, and then that gets sent out to holders of the appraised value. And then they still have the asset NFT, which produces passive income every month on the first. And they also have that asset where they could go if they, choose to. They could sell it on the secondary market or they can keep it.
All right. So looking at my notes, I noticed you guys also have property access control. Can we go into that a little bit and what that entails for the end user?
Yeah, absolutely. So when you're an investor and whether you're staking your Gcoin, HBAR, Wrap Bitcoin, or USDC against one of our assets, you have control and visuals of the renovation of that asset. So we set up cameras in any property that goes under renovation, and it's a live stream to the end user. You'll be able to see any renovations going on to that house. And let's say you don't like something that the contractor did. You can enter into the chat and you can say, hey, I don't like how this looks. I want you to take a look at it and talk to the contractor about it and see how we can do. That way, everybody that invests their money into this asset has full control over the asset, and they dictate what happens in that asset. If they don't like a color scheme, it could be put to a vote through the community that all the investors of that property will have a vote and say on what happens inside this asset.
Okay. Now, while you were saying that, I was thinking about something else, and based on NFT ownership, or would it be the G coin? Do you guys have a governance structure where holders can vote on changes to the property?
So currently we do not, but it's in development through our
Okay.
platform to have that available. And depending on your level of ownership in that asset or your staked currency in that asset will determine the value of your votes get.
Okay. Yeah, because that's a unique aspect you could bring into it as well. You talked about the East Coast of the US. Apart from the US, what are some other locations worldwide you think would be intriguing?
So funny or not, the South African market is on the low end, but we're seeing signs of significant growth in that market. So
Okay.
South Africa is an area that we would look at. Right now. We're not in the phase of going international. We have plans of it, but it's more of a 20-year roadmap looking like versus a short-term roadmap. So I
Okay.
haven't done much market research outside of America because right now it's not in our near-term sight.
I understand. Now, you guys also have smart contract leasing. What does that mean?
Smart contract leasing is where you will have the ability to lease out this property. So you're able to give that passive income to somebody else in return for what you determine. So you could sell that lease agreement for Bitcoin for you to store your value, or you could HBAR, USDC, or Gcoin. So if you think that Bitcoin is going to accelerate versus the appreciation of that asset, you'll be able to lease that asset out to somebody where they'll hold it and they'll receive the passive income while you store your value in another currency. And then after the lease agreement is over, you get your asset back, return the money, and that gives you a chance to have full ownership in your asset.
Okay. Now, would that be considered a blockchain loan against your asset?
Yes, so absolutely, it would be, and that technology is going to be implemented when we go further into our lending and borrowing programs.
Oh,
You'll be able to leverage your assets, not just your asset NFTs, but your founders NFTs, your pioneer NFTs, and you'll be able to leverage them for loans, and you'll be able to reinvest those loans into new assets that are minting. You'll be able to leverage your asset to get more assets. And it's all backed by the estate. So we keep reserve funds on reserve in order to secure any loans that are being taken place. So if anything happens, you're always protected. Your money is always protected by the estate through our wrapped Bitcoin reserves.
okay, great. Now, you also talked about when the platform is launched. How far are you away from launch right now?
So September 15th is looking like the date that we're going to be launching for beta testing to our Financial Freedom Eagle NFT holders.
Okay.
I could go into more about the Financial Freedom Eagles, but they're AI agents that we're going to be building. If you hold one of those, you'll get access to our platform for the first 15 days. Through that 15 days, we're going to go through our beta test and a stress test the platform, a little hackathon that we'll have. And after the 15-day period, we'll go live to the public.
Okay. So by the end of September is your goal at this point to fully launch the platform?
That's correct. And the launch is going to be our phase one. What's going to be available to the general public is our equity staking programs. So on our platform, you're going to be able to stake in the equity of real estate assets. And what we've done is we fractionalized the equity in real estate. Uh, Real estate investors know there's multiple ways that you can appreciate an asset. An asset can appreciate just from the natural market year over year, or you can
Yep.
appreciate an asset with sweat equity. And what we've done is we've broken that apart, and we're allowing people to invest in just market appreciation, which is more of a stable APY interest on your money, or you can go into the sweat equity appreciation equity funds, and you can invest in the sweat equity of assets. So let's say this asset needs to go under renovation. We'll put it up for staking, and let's say the asset needs $50,000 in order to go under renovation. With the
Okay.
cap on staking will be $50,000. Investors will come in, they'll stake their G coin, wrapped H bar, wrapped Bitcoin, or USDC, and it'll be locked up for a certain amount of time. That time frame is determined by the contractor doing the work. They submit an estimate and a time frame that gets put on chain so that all of our investors can see it before they invest their money into it. That time frame is determined by them, so the lockup period will be well known. So that money gets locked up. We take it, we invest it into the renovation of that asset, and then after that asset is renovated, we call an appraiser in. They reappraise that asset, and
Pull the
then we do
equity back out.
pull the equity back out and then send it out to
Mm,
holders.
that's so nasty. Yeah, that's a great concept there for sure. Because the reappraisal and pulling the equity back out is how you take care of that. Yep, I got you. That was sick.
Yeah, and then
Um,
the mortgage is paid by the tenant. So the tenant's footing the extra bill, and the investors are footing the bill for the renovation, and then they get the appraised equity back at the end of the lockup.
that's pretty sweet. Now, to close out the interview today, is there anything else you would like the listeners to know about Gilmore Estates?
Yeah, absolutely. So, we're not just tokenizing real estate, we're tokenizing everything of value. We're tokenizing real estate, we're tokenizing knowledge, which is our knowledge tokenization studio, where anybody will be able to start their own educational course on knowledge that they know. Whether you are a tax consultant, a lawyer, a chef, a exercise fanatic, anything that you determine of value, will be able to be tokenized on our platform. You will create your own educational NFTs with your educational books in PDF format inside of them. And you'll be able to assign tests and quizzes per chapter where your educational token will be rewarded to the user for participating in your test. Every time they take a test and pass that test, they'll get rewarded with your educational token. And the value of your educational token, where that liquidity comes from, is the sale of your NFT books. And that's all going to be built on top of our estate token. So it's going to be their educational token paired with Gcoin is going to be the first liquidity pool. And so the more value that educators bring to their community, the more value they bring to our ecosystem token. The next thing we would like to say is that one thing that we're tokenizing is systems. Our Gcoin Founders NFT paired with our Pioneer NFT is a cash flow compound system. If you take the rewards that you get every week from the Gcoin Founders NFT, you take that Gcoin, and you have the Pioneer NFT that gives you the liquidity rewards. If you provide liquidity in HBAR, you get HBAR every single month on the 15th. If you provide wrapped Bitcoin in liquidity, you get Bitcoin every single month as your reward.
Cool.
What this system does is now you take that Gcoin that you received from the Gcoin Founders NFT and you take that HBAR you received from the Pioneer NFT and you go and you put that back, you combine that back into the liquidity pool and you put it back in. Now next month you get more rewards and you compound your investment week over week, year over year. And that's one thing that we're big into is tokenizing systems to generate cash flow and compound your interest.
That's awesome. Now, for the next 6 months or 1 year out for Gilmore Estates, what are the next goalposts that you're setting for the project?
Yeah, so for the next 6 months, we're looking at the launch of our staking platform, the launch of our tokenization studio. With the tokenization studio, that's got the built-in learn to earn platform where you learn as you earn. We've also got our Financial Freedom Eagles platform, which is an AI agent builder. It's going to be a ChatGPT-like environment where you ask the ChatGPT for information on a certain field. So let's say you want to build a tax consultant. You assign the AI agent a trait as a tax consultant, and now this agent will only upload information that pertains to tax consulting. And all this data that you're uploading to it is verified through ChainLeak oracles. And those oracles and that data verification assign your NFT a grade. So the more information you upload into this agent, the higher grade it is. The higher grade it is, the more value it has on the secondary market and to you as a user of that NFT. That's going to be within our 6 month look ahead. When we look at our year look ahead, we're looking at, we'll be releasing our digital asset marketplace. So this is going to be a NFT marketplace where you can buy and sell digital assets and assets that are more than just JPEGs. They provide some type of utility, whether it's from the Knowledge Tokenization Studio, real estate NFTs, or anything that brings value to the holders will be able to be listed on this platform. And then we've got our decentralized exchange that we are building. And this decentralized exchange, it's not a traditional decentralized exchange. It's a estate management platform. So you're going to be able to do more than just swap and trade digital assets. It's going to be for you to manage your estate, whether you have a real estate in the real world, or you're just managing your digital estate.
All right. No, that's great. So this has been Gilmore Estates, Web3 Real Estate with Chris Gilmore. Thank you for being here, brother.
Thank you for having me. I appreciate it.
The Crypto News Podcast with your host, Joshuwa Roomsberg. Follow and subscribe today.